Are you there? Yeah, you're there. Man, we're going to talk about edge data today. You know what I'm saying? We're going to talk about edge data. Edge data. Edge data. You got to go like, you know what I'm saying? Edge data, yeah. So, yesterday, is my thing lagging a little bit? You see it's lagging. See how the camera can't refresh. Look at me blurring up. Anyways, yesterday we talked about rules. How in the heck did I come up with these rules? I was thinking about that. I was like, man, how do they know what rules to make? If you can't just tell somebody you need rules and then, you don't know what rules to make. Yeah, no, I know they don't know what rules to make. I know. Okay, I'll tell them. I'll tell them. Got it. All right, bye. Edge data. I'm telling you. Okay, so how do you find edge data? Well, one thing's for certain, you're gonna need to journal your trades. Okay? You're gonna need to journal your trades. Now, how do you journal your trades? Some people are like, that's blah, 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 this and that. Well, I'll tell you one thing that I do. I load up a Google Docs. I take a screenshot of the trade. I say the key. Sorry. I give the key takeaways of the trade, right? What are the key takeaways? And the reason why I give key takeaways is because I have two Google Docs, one for my winners, okay? One for my winners, one for my losers, right? So one Google Docs has all my winners on it, and I got the key takeaways of my winners. It says like, I did tight risk to reward. That was a commonality in this trade, or I had let's see, wasn't it I had a planned entry and exit, or I was unemotional, something like that. So these are things that matter of fact, I'm just gonna show you. Would you like that? I'm just gonna show you. Let me show you. Let me load it up. Hold on. Let me load it up here. Okay. So here's an example. Let me load it up here. I don't know if you can see it or not, but let's say you can see it. Okay, we're gonna pretend like you can see it. Look. Oh, let's clean it up a little bit. Here we go. If you can see, right? Good trades. Here's my Google Docs of good trades. This is the common theme in my good trades. I have good risk to reward. That means I'm not risking too much, and making very little. I'm risking a little bit and making a lot. Right? Good risk to reward. Defined buys and sells. I know where I'm gonna get in. I know where I'm gonna get out. This is what my good trades have in common. Okay, tight stops, that goes a good risk to reward. Waited for confirmation. That means I don't just jump in if something hits my level. I'm making sure, blah blah. That has a little bit more to do with strategy, right? And then multiple confluences, whether that's gonna be I'm using volume mixed with candlesticks, mixed with trend lines, mixed with support and resistance. This is stuff that my good trades have in common. And another thing that I should have written up here is that I took the trade in the morning, right? Because a lot of my really, really, really good trades happen in the morning. And a lot of my bad trades happen throughout the day, right? I took worse trades as the day went on, And that has a lot to do with our psychology in trading. If you didn't know this, the brain gets irrational after 2 to 3 emotional decisions in one day. Okay? So I classify trading as an emotional decision. I don't know about you. Whenever I hit that buy button or that sell button, that short button, that long button, whatever button I'm clicking, something flips. I'm watching the candles closer. I'm feeling the volume come in. Anyways, I don't I don't want to get too intense, but man, I am in tune, right? I'm like, I can't focus on anything else but my trade, right? So things happen, and so it's an emotional decision. Trading is emotional, and controlling emotions, one thing, this is going to help you, but overall, it's an emotional decision. And we really can't be making so many of those a day before we get irrational. The brain's going to start making bad decisions, right? Because in the beginning, before we make these emotional decisions, we're rational. We have good ideas. We're thinking clearly. Then as we make more emotional decisions and we damage our brain or psychologically intraday, right? Then we go to sleep and we forget about it. But after we do this damage in the morning or throughout the day, right? Now your brain's like, man, I can't take anymore. I need to rest. So mental capital is a real thing, right? That's why I trade in the morning. Now, some people can't trade in the morning. They work a 9 to 5, and maybe they want to trade futures market after hours or crypto. So it's going to vary, right? Or maybe they trade pre-market. For me, it's the morning. Okay, so I just want to go through we'll go through one of my, like this one was okay, right? This one was a long, everything was there for this trade. We're holding the low range in the volume zone. Is my deal? 1 second. Yeah, it's good. I say we're holding the low range in the volume zone, the trend break, add after the retest. So this one, I'm just documenting what I did, right? Just documenting it, figuring out what I did, right? These are good stuff, added to the winner, took off risk when it was going against me, stuff like this, right? And we'll go to my most recent one. This one's going to be my most recent one. Now, what you might notice is that a lot of my data here has a lot to do with strategy, right? But a lot of you might notice this in your good trade documentations, right? My good trade documentation, I'm showing you about my strategy and stuff like that. But really, which is something I need to do better at. I need to do better at documenting how I felt, what time of day it was, how much I risked. These are things that are more important, right? So we'll just look over this one real quick. Today was good trading, tight risk, solid target. I was patient. That's one thing. That's a commonality, right? So even we can make that a deal. Patient. There you go. Just put it in there as a key takeaway. I was patient. I shut it down after this. I'm getting much better at sticking to the plan and being consistent. This is what I want to document. I want to document how I'm feeling, how it's been with my trading journey. I want to document this stuff. Now, yes, I can document about the strategy, and I did kind of do that with the kind of notes here, the drawings. I kind of did that. But more or less, that's what I want to document, okay? You had enough of the good trades? You seen a couple of my good ones? It's nothing, right? It's just stupid little trend line, and little stuff here. Let's look at the bad ones. I'm going to share with you some of my bad trades here and just show you, okay, why I have these rules. Because remember, these rules are not meant to cap my upside, although they sometimes do, like my trading time. My trading time might cap my upside if I'm trading extremely well that day, right? But it's meant to cap the downside. It's meant so I don't blow up my account. It's meant so I don't have a terrible day. Trading should not ruin your day. Trading is, you do it and you go live your life, man. You're supposed to be free when you trade, shouldn't you? We're trading so we can be free. We're not trying to trade to be stuck at the screen all freaking day, burning out our eyes, needing new prescription glasses. That's not why I want to trade. I want to trade so I can make money, hit it, and have a good day, man. That's why we want to trade. We don't want to just freaking start machine gunning trades all day and acting like this is fun. Okay, although yes, it can be fun to correctly trade the market and stuff like that. I don't know about you, but being break even on a day is not fun, right? So I'm not trying to go or even losing money on the day. That's horrible, right? That's not fun. You're like, man, I could have done something else in my time. So that's why I have a specific trading time. I only trade during this time, and then I consistently stick to that because I know that I didn't go over, I didn't go under my time. It's all consistent. So let's go to bad trades, should we? Let's go to the bad trades. I'm biting my nails here. Okay. So, you're going to hear a lot more about risk management stuff in these deals and the bad trades. A lot of just, this is why you need to document this stuff. So when you look back over your bad trades and you see I have this common theme so far, you need to have this stuff, I'm telling you, because you can go back, quickly look over your trades and say, man, this is my problem. I'm going to fix this. And if you don't have commonalities or you don't read over your journal, you're not even going to know. You're not going to know your edge data, right? So this is how I found my edge data when I made my rules. If you want to know my rules, watch my last video. It's called 20% strategy, 80% behavior, why you need rules in your trading. But here we're talking about how I even got those freaking rules, right? So common themes, bad risk to reward, man. What did that might mean I'm FOMOing in, right? If you see something moving really quickly up, you just buy. You're not thinking about tight risk or something. So bad risk to reward, not tight enough stops, adding to a loser, averaging down, right? You ever done that? You ever averaged down into a trade that was not working, and then you're like, well, you know what? If I average down, it gives me a more probability that I'm going to get in the green, and then blah, 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 and then you blow your account because it keeps going lower. We've got a perfect example right here in this first one right here. But yeah, no real strategy, right? That's another commonality. There was no defined risk, defined buy, defined sell, right? Trying to fight the trend, that's a common thing. Not trusting my analysis, holding when there's not much risk to reward left. Sometimes I do that, right? Sometimes I just place a sell order if I already have shares bought. I'll place a sell order, and then we'll get really close to sell order, and it never occurs to me that it doesn't have to hit there exactly, I can take the freaking money. It's made like 95% of the move. So scaling out, stuff like that. But let's read this one. Look at this trade. Absolute flusher. Started the day with missing my entry for puts. If you don't know, puts are a short trade in options. You're betting it's going to go down. So I missed my entry for my bet. I went calls the entire day. If you don't know, calls are betting it's going to go up. So I missed my entry for my bet that the stock was going to fall. It fell, and because it fell, I thought it was over. I started to go long and say, you know what, it's over. I'm going to start going long because I wanted to make back what I could have lost or what I could have made. I wanted to make what I could have made. That's a better way to say it. I ended up down 4% of my account when my max daily loss is 1% of my account. So, commonality, didn't follow my rules, okay? So, key takeaways, I'm actually going to add that. Did not follow rules. That's very common on a bad day like this, right? Then at the first arrow, I thought I couldn't lose because I saw volume drop off. Oh, you know what? Yeah, this one's actually missing a screenshot. So disregard this. we'll look at that one in a second, or maybe we will. But this was actually missing the screenshot. But long story short, oversizing, didn't follow the rules, painful trade. I hated myself, and massive loss, down 13% of my account in one day, guys. Who can survive that? I mean, you might can survive that, but having days like that, you're not going to survive as a trade, okay? Let's go to another one. We'll go to a random one. We'll just go to this one right here. Okay. Short. This one was a short trade. Entered short off the high volume around 8:45. Oversized. There you go. Another key takeaway. Oversizing right here. Oversizing. Not trusting strategy. Flipping bias. Not following rules. Long story short, guys, you need to be able to have edge data in your trading. Understand, what is my problem? If I'm oversizing, great. I'm going to make my daily loss limit 1% of my account, which is one of my rules now. I'm not going to risk more than 1% of my account per trade as well, right? So your edge data is going to tell you a lot. Where's your edge? Where's your weaknesses? Right? Where's your strength? Where's your weaknesses? My weakness, I oversize. I revenge trade, right? Very common for traders to do that, right? Volume was telling me that buyers were absorbing. Price followed by pushing higher. Ended up down to about 5%, 5.8% of my portfolio instead of the 1%, which I should have taken. Shut the computer down. So another thing, over trading. I'm going to mark that. Over trading, right? So you're seeing how I do this. I don't want to make this video too long, but all I'm doing is I am documenting with a screenshot, taking notes about what happened and putting some key takeaways. Then I'm summarizing all of my screenshots in key takeaways at the top, so I can quickly see what I don't want to do. I don't want to oversize. I don't want to break my rules. I don't want to not have a strategy. I don't want to overtrade. Then I can load up my good trading Google Docs and say, this is what I want to do. I want to have tight risk. I want to have correct position sizing. I want to have a good strategy. I want to follow my rules. And all of a sudden, we've created a trading plan. We've created risk management, guys. So that's how you get edge data. You have to journal your trades. Guys, this is so easy. If you don't at least think this is enjoyable, you get to look back on your losses like this. Listen to this one. I feel for myself here. I mean, imagine this trading day. Very bad trading day. Lost about 20% of my account. Man, when will I learn and stop oversizing? First yellow arrow, I saw capitulation. Then I went too big in size. Should have waited for more capitulation. That would have been a nice trade. And then I actually said, praise Jesus, I'm learning. I kind of gave myself some props because although I had a bad day, I understood that I was still documenting that I had a bad day. And I was learning from it, right? So that's key. And key takeaways here: oversizing, impulsive trading, eager, bad risk management, right? So we'll go to my most recent one. Let's see. Yeah, so this one, I just got stopped out. Holding when not too much risk to reward is left, not moving the stop up. So that's my most recent one. That was on February 12th. Now, today's March 7th. You might be asking, this is very key. Where are all the other screenshots? You got to have had some bad trades. Now, I have had some bad trades. Why aren't they documented? Here's the deal. I don't document every little freaking trade. I do document every trade that makes me somewhat emotional. If I have a bad trade and I'm like, man, that you just take that breath, you're like, man, when am I going to learn? Or not even when am I going to learn, right? Maybe you're just like, man, that just didn't feel good. I really could have done better. Boop, straight to Google Docs, document. Maybe I have a really good trade and I'm like, wow, that was fantastic. I did that. Boop, straight to Google Docs, and I document it, right? So this good trade, I had a fantastic trade. Let me load it up, right? I had a fantastic trade just the other day. It was like yesterday or something. Oop, hold on. Just the other day, right? This was March 5th. This was this one. So, although I don't document every single day, I'm documenting the important ones because some days are just not, you don't want to have your journaling absolutely flooded with all kinds of crap and it's hard to look through. You want to go through the ones that have made you emotional, that have made you say, "Man, great job," or "Man, I really could have done better," right? So, that's how you get your edge data. That's how you figure out what kind of rules you're going to need to make in your trading, okay? Now, this video is already long enough. I don't need to be preaching for 30, 40 minutes. 20 minutes is good, okay? If you want to hear me scream at you about your trading, join the Discord. Links in the description. Other than that, I'm out.